Hello everyone, I am Prof.P.M.Chougala. Today I am going to discuss on distinction between visible trade and invisible trade and preparation of current account and capital account of balance of payments. Friends, before going to discuss, I request to you all kindly subscribe to my channel to get updated videos and share this video as much as possible. Thank you. Okay friends, here to discuss on the above topic, I have collected for semester BCom degree examination May June 2018, which this question paper published by Rani Chennamma University Belagavi. Okay friends, as you know that section D always it has compulsory question, popularly known as case study, for 15 marks. Okay, in this question paper the main question is that following are the items of exports and imports in respect of France. It means these items, these datas belongs to France country. Okay, by keeping into mind this aspect, just observe before going to discuss. Just observe the question paper. Okay, friends. Here, first item is that export of goods 85,000 crore francs. Export of services 20,000 crore francs. Export of machinery 10,000 crore francs. And import of goods 65,000 crore francs. Import of services 25,000 crore francs. Import of machineries 18,000 crore francs. Export of wine 16,000 crore francs. Import of wine 11,000 crore francs. Gift received 2,000 crore francs. And gifts offered to India 3,000 crore francs. Capital received 20,000 crore francs. And capital payments 31,000 crore francs. Okay, this is concerned to the question paper. And then on this ground, on this basis, there are again three questions are asked. Which are these? Question A: distinguish between visible trade and invisible trade. B: prepare current account and capital account of balance of payment using above data. Okay, so this question purely belongs to above datas. And then C: what is balance of payments position of France? Okay, France. Here A, it means question A, it become theoretical part. Okay, and question B, practical part. And question C, it is become the result of above aspect. Above means especially question B. Question B, whatever it gives a result, that is become the result of what? The France country's balance of payments position. Okay, so by keeping into these questions our mind, we will be discuss further one by one. Okay friends, as you are looking towards the screen, see here we will go one by one very systematically. See here, question A: distinction between visible trade and invisible trade. Okay, before going to this aspect, just we have to check out what is visible trade. what is visible trade. Okay, so friends, visible trade consists of the imports and exports of physical goods. Physical goods means which the goods are tangible, which the goods are tangible. Tangible means we can touch, we can touch the goods, we can touch the goods, are known as the tangible goods or physical goods. Such kind of the goods are considered in which visible trade. Okay, and then next, what is invisible trade? What is invisible trade? Very important. Huh? Then, invisible trade consists of the importation and exportation of services. It means importation and exportation of intangible items. Intangible items means which we cannot touch to the items, known as invisible trade. Invisible trade. Okay, friends. I hope that you are clarified. Okay, then now we will move upon, that is the main concept. Okay, that is what? Distinction between visible trade and invisible trade. Here at the left hand I put visible trade, and at the right hand I put invisible trade. Friends, at the side of visible trade, see, visible trade consists of the imports and the exports of physical goods. But invisible trade consists of importation and exportation of services. Okay, and second difference is that balance of visible trade studies about relationship between the value of export and value of imports. But here balance of invisible trade studies about the relationship between the value of invisible exports and value of invisible imports. Okay, and then third difference is that export with physical appearance, and at the side of invisible trade, exports without physical appearance. Okay, and then fourth difference is that export of goods worldwide made possible. Okay, and then at the side of invisible trade, global finance services and tourism all engage in invisible trade. Okay, friends, these are the aspects, these are the differentiating measures of what? The visible and invisible trade. Okay, I hope you are understood about these concepts. Okay, friends, and let we'll move to the next aspect, which is that one, that is preparation of current account and capital account of balance of payment. Got it? Okay, friends, here I have covered some sorts of the theoretical aspect, because the theoretical aspect is the backbone of the practical aspect. Got it? Without knowing the theoretical aspect, we can't be able to calculate accurately, and we can't be able to give the accurate result even. That is why I have covered here some sorts of the theoretical aspect. Okay, well, we will go one by one. Friends, here meaning of balance of trade. Meaning of balance of trade. What is mean by, or what do you mean by balance of trade? Okay, friends, as you know that balance of trade means the difference between merchandise exports and merchandise imports. it is a balance on the trade account. It is a balance on the trade account. It is related to only trade in commodities. Trade in commodities. It is a balance on commodities account. It includes only visible items. It includes only visible items. The services are invisible items. Got it? It means the goods are visible items and the services are invisible items. Okay, this is one thing. And next one is that what is balance of payment? What is balance of payment? More important thing, that is balance of payments is a systematic record of all economic transactions between the residents of one country and the residents of the rest of the countries of the world. It depicts the overall position of the country relating to international transactions. Relating to international transactions. Got it? And for this, many more economists have tried to define about the balance of payments. Among them, according to Frederick Benham, he tried to define the balance of payment. According to his own words, the balance of payment of a country is a record of its monetary transactions over a period with the rest of the world. With the rest of the world. The Frederick Benham's definition and above meaning aspect, both are similar in nature. Both are similar in nature. That is why the balance of payment of a country is a record of its all monetary transactions. All monetary transactions. It means the balance of payments. It includes the current account and capital account. It means whatever the a country within a span of time, whatever it has done, trade in the form of goods, in the form of services, or in the form of any investment measures or the capital transactions, all are comes under this criteria. It means this calculation. Okay, this calculation means balance of payment calculation. Okay, friends, now we will move to the next aspect, that is meaning of current account. So very importantly, now we are going to construct, we are going to form, and we are going to calculate what the current account and the capital account. So here before going to that part, we have to be clearly understood about what is current account and what is capital account. Okay, friends, here current account, it includes the flow of goods and services. The flow of goods and services. It means import and export of goods and services and unilateral transfers like gifts. The current account consists of all transactions relating to the reporting countries, national income and current expenditure. These include exports and imports of goods and services along with unilateral transfers. Unilateral transfers. The current account includes the account of visible and invisible items. The current account includes the account of visible and invisible items. The visible item refers to physical goods or merchandise imports and exports. The balance on the merchandise account is referred to as balance of trade. So friends, it is very easy to understand the current account which it include the visible goods as well as invisible goods. Okay, friends, I hope that you are understood. And now we will move to the next aspect, that is meaning of capital account. Meaning of capital account. What is capital account? The capital account shows the position of a country with reference to its international investment. In the words of B.J. Cohen, all such private or official transactions affecting the international investment position a country rather than its current income are segregated from the current account and grouped instead in the capital account of balance of payments. Further, he has given a few examples of the items constituting the capital account, like direct investment means transactions involving a permanent interest in enterprise outside the country of residence, and portfolio investments means transaction in assets and liabilities outside the country of the residence with an original maturity of more than 12 months. And government capital means official transactions in assets and liabilities outside the country of the residence, including services, including reserve assets, etc. By discussing about these all aspects, above these all aspects, why I have covered more theoretical part in this concern, because to understand as easy as possible. Okay, so in brief, capital account shows capital investment in a country. So friends, after discussing these whole things, theoretical part, now we will come to the next important aspect. Got it? So here, table number 2 depict that preparation of current account and capital account of balance of payments. So as in question paper they have mentioned, the figures are measured in terms of what? Crores franc. Crores franc. Okay. So as much as my level best, I have made easier to construct the balance of payments positions table. And here friends, this balance of payment positions measurement method based on double entry criteria. Okay, so at the left side I put here credit, and at the right side I put debits. Okay, so in this single table I have made and substituted and inserted two accounts, that is current account, and the other one is capital account. Okay friends, the current account, it includes export of goods, how much? 85,000 crore francs, and import of goods 65,000 crore francs. Export of services 20,000 crore francs. Import of services 25,000 crore francs. Export of machinery 10,000 crore francs. Import of machinery 18,000 crore francs. Export of wine 16,000 crore francs. Import of wine 11,000 crore francs. Gifts received means unilateral transfers, that is 2,000 crore francs. Gifts offered to India Unilateral, it means unilateral transfers, that is 3000 crore francs. Okay friends, by summing of these all datas, we got at the receipt side 1,33,000 crores francs. Okay, and at the debit side or the payment side, by summing up these all datas, we got 1,22,000 crores francs. Okay, so this is concerned to what? Current account. Current account. And now we will move to the calculation of capital account. Capital account. Okay friends, here the capital account, got it, B, capital account. There are two items, capital received and capital payments. Capital received is what? 20,000 crore francs. Capital payments 31,000 crore francs. Okay. Okay friends. Then total receipts A plus B. A means this current accounts receipts and B means this capital accounts receipts. What is this? 1,53,000 crore francs. 1,53,000 crore francs. Okay, and then total payments A plus B means A means the current accounts datas, that is payment side, and B means capital account side data, that is 31,000 crore francs. Okay, by summing up, it means 1,22,000 crore francs and 31,000 crore francs. By summing these two datas, we got what? 1,53,000 crore francs. Okay friends, so this is the discussion concerned to the measurement or calculation of balance of payments, and calculation of also current account and calculation of capital account. Okay friends, and now we have to answer for question C. Got it? Question C. Question C is what? What is the balance of payment position of France? Okay friends, by observing the above table number 2, it states that the balance of payments position of France is what? Equilibrium or balanced. Equilibrium or balanced. This conclusion is very important. And on what ground we are saying it become equilibrium or balanced? The ground is that what? Total receipts are equals to total payments. It means total receipts are 1,53,000 crore francs. Total payments also 1,53,000 crore francs. So this is the discussion concerned to the above the current account and capital account. So friends, thank you for watching, and for more updates please subscribe to my channel and share this video as much as possible. So once again, thanks to one and all.